Hi, this is Daniel, and you're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. I'm looking for potential multi-baggers or types of stocks that could potentially go up hundreds or even thousands of percent over time. If you want to follow my personal journey as I look for these potential multi-baggers, go to unrivaledinvesting.com where you can see what I'm buying and selling each month. Now, this video is supposed to be a quick follow-up video to Alibaba. My last one gave a detailed overview of what do they do and why I think it has a potentially very attractive risk reward, where in some case you could look at just one segment in this business, this Alibaba business. BABA is the ADS that trades on the US exchange, where their one segment, their cloud segment, could potentially be worth, in a favorable scenario, this cloud segment could potentially be worth more than their entire market cap right now. And that would ignore significant investments they've made in other companies, as well as their behemoth e-commerce operations that primarily operate in China, but also have several different global marketplaces as well. And so here it is, when you have just one segment that could potentially be worth the entire market cap, not giving any value to these other businesses, including this e-commerce piece that might be multiples the size, it did strike me as super compelling. Since then, the stock price is down about 15%, and investors are going, oh, boo-hoo, I'm down a little bit. Suck it up, folks. I mean, this is called volatility. This is the name of the game. And let's be realistic for a second. Like, you know, I'm not looking to put down anyone and make you feel bad if you're seeing red in your account or negative in your account. And so the point being is that you need to ask yourself, like, is Mr. Market, and this is the key lesson that Buffett learned from Ben Graham many years ago, is Mr. Market or Mrs. Market, however you want to think about the market, is Mr. Market there to serve me, or am I supposed to say, hey, I dictate to you what I like? And so when Mr. Market says, hey, here's the price of Alibaba, it's down 15% from the price that you thought was reasonable, are you supposed to just say, you know what, this is too much pain for me, I'm supposed to get out? And so I think this is a perfect litmus test for you to think about what type of journey you want to have. Because if you're not in a mental position to say, hey, this is a value of something, and I'm going to stick to it, and I don't care if the quotational value goes way up or way down, I'm thinking about what's the fundamental value. If you have trouble thinking about that mental model, maybe this game isn't right for you. And that's something for you to seriously consider, because I see comments, I see people give me this sort of feedback like, oh man, now that, you know, this is pushing my pain limits, I don't think I can take it anymore. Then you need to rethink that game. You know, if you can't separate the difference between what's the price and what's the valuation, and in my opinion, a 15% drop is nothing. I mean, I you know, as I've routinely talked about, the largest one single day drop was one of my largest positions dropped 70% in a day. So like, this is volatility. You're going to have it in the stock market. Now, the question is, could I be wrong? And the answer is, of course, I could definitely be wrong on Alibaba. You know, and folks are like, well, wait a second, is this time to double down? Or, you know, what if you're wrong? So the way I'm thinking about the ways I could be wrong, because since then I did that video, some additional data points have come out that are worth considering. Like, for example, one of which is the fact this DD IPO that does. It's a snafu, and I recommend you check out the videos I did on DD, where, in short, increases the risk that there's tension between the U.S. and China, particularly on listing U.S. stocks. It does increase the probability, in my opinion, that you have a delisting. And that's part of the reason why it is important to consider the Hong Kong shares as well. So you do have that element. Another aspect is I think the macro data on China is suggesting that it could potentially go slower, or it might be, you know, facing some sort of tightening. And so that is, of course, a risk. You do have macro concerns. You could also have, you know, another major macro concern that could happen would be, you know, if the CCP did something drastic where they said, hey, we're going to, you know, significantly penalize Alibaba, or if they had geopolitical tension. So there's always lots of ways you can lose with investing. Like, in investing, if you think you found like a surefire thing, the reality is you probably haven't. And so my personal view is you need to consider the probabilities of these different things. Like, for example, the CCP could crack down on China, but the way I view it is could crack down on Alibaba. But the way I look at Alibaba is I think it's a valuable asset. It's part of the national treasure in China, and I don't think they want to ruin it. I don't think they want to destroy it. That's how I'm looking at it. And so, you do have these other risks. You obviously read all the risks in the Alibaba 10, financial, the 20F, the financial filings. And so, I'm just thinking about where are the potential blow up risks. Another risk is there's some sort of snafu with their reporting of their financials, or some sort of competitive threat where, various different e-commerce players start taking more and more of their market share. Now, I think the valuation is such that, hey, you know what? It's still baking in a pretty reasonable valuation. It's still baking in a pretty attractive risk reward. And so that's and as I did, and you can go back to my original Alibaba video, I talked about how even in my low side, I thought it reasonably had upside potential, and in my upside case, it had a lot of potential. And that's the types of risk reward that I'm looking for in these investment plays. So, I'm talking about these macro risks. I'm talking about how it's potentially turned up, the heat got turned up a little bit with this lousy DD IPO. There's increasing macro concerns with China in terms of their economy potentially weakening. There's the stock price is down, which makes people a little bit nervous. Could the stock price go lower? And my thought process is definitely. Of course, stock prices can always go way lower, but that's why you need to have your, first of all, this goes back to the first question of what type of investor are you? Are you letting the market set your terms and set, how you're going to have this journey? Or are you going to say, hey, I'm thinking about this value, and you update your sense of the value with every financial update? So for me personally, yeah, there's going to be a lot of noise and wiggling from month to month, week to week, but what I'm really focusing on is those quarterly results. What do your financials say? Because that's really what's moving the boat in terms of like, yeah, this is the intrinsic value, and whether or not I should be thinking about it as here or here or here over time, that's getting the financial updates. The stock price day to day and what's going on, that really does take a backseat in my mind. I look at that as largely short-term driven by fund flows. And right now, you have sort of an icky factor when you look at Chinese stocks where people are just saying, I don't want to own this. It's just too hard. And honestly, you look at Chinese stocks, particularly Chinese tech stocks, and they are in the doldrums. They've been severely beaten up. There is definitely this sort of like, I don't want to touch it. And so short-term fund flows drive stock prices. Funds are effectively saying, no, we don't want to be there. Long-term, it's the intrinsic value. Long-term, it's the fundamentals. And so that quarter by quarter, that's what I'm focusing on. And, maybe I'll do a follow-up video after Alibaba reports their second quarterly results. If that would be helpful to you, let me know in the comments below. And so, I'm trying to provide a framework for, risk reward. Of course, I could be wrong about Alibaba. Do I still own it? Have I sold my shares? No, I haven't sold my shares. I'm still very happy with my position. Is it time to double down now that it's down by 15%? Personally, I don't view 15% as a huge drop. I sort of view that as like, meh. And I personally have, as Journey subscribers know, I personally have already a very large bet on various different Chinese stocks. And so you could find out more about that at unrivaledinvesting.com about, my approach, where personally, I think the right way to do it is to align yourself with companies that the CCP has sort of given their blessing on. And that increases the odds of let's say, it lowers the odds that you potentially have trouble. So that's how I'm personally thinking about it. But yeah, it's, as I look at this, could Alibaba stock go down? Of course. Do I like the risk reward even more now? Of course I do. Am I doubling down? No, I'm not. I mean, 15% drop, isn't that significant? Is it still a meaningful percentage part of my portfolio? Yes, it is. So I felt like it's important to do this video, just sort of doing a quick recap of where we're at, how I'm thinking about it. If it's helpful for you, if you've enjoyed this video, please make a point of subscribing. If you're already a subscriber, I do appreciate that thumbs up. Thanks so much for watching.